No, certainly, Nhlanhla. I think based on the forecast that we're anticipating for the upcoming year of 2021, of course, this year we're anticipating contraction of no less than 7%. Next year, we expect a rebound due to the easing of economic regulations to about 3%. And we're only truly looking at seeing output levels at the levels of 2019 in the year 2024. Now, of course, this can also be bolstered if indeed there are implemented structural reforms that we've been anticipating even prior to the adverse effects of the COVID-19 pandemic. And if those are accelerated and implemented as prudently as possible, we would anticipate slightly higher output levels or even earlier than 2024. But I think the economic fortunes for South Africa are directly correlated with the developments that are taking place as it relates to vaccinations, the developments that are taking place in terms of the containing of the spread of the virus in South Africa, but also most importantly, South Africa's largest economic trade partners and how those economies perform as well.
All right, what can you tell us in terms of which economic sectors will recover first? I mean, one thinks about the tourism and the airline industry. I mean, how will they pick up the pieces here?
So tourism is one of those industries that has been adversely affected by the nature of the COVID-19 pandemic. And as a consequence, we do forecast a medium-term outlook in terms of the recovery of that sector. Unfortunately, it does look quite bleak in that respect. Again, it's also directly correlated with how well we're able to do with vaccinations and really dealing with the spread of the virus. But what has been holding the South African economy over this past year has been sectors such as agriculture. Agriculture has been one of the green shoots in the South African economy in the year 2020. We've also seen the finance and business sector as well holding up the South African economy with adapting to some of the adaptations that come with working from home. And also, we've also seen the significant job losses that have been recorded as a consequence of the stoppage of the South African economy. The contribution of the South African government from a public sector finance perspective has also contributed towards ensuring that the South African economy is able to have some relative level of stability given the adverse effects of the COVID-19 pandemic. But going forward, we do anticipate more aggressive levels of input when it comes to the industrial policy aspect of the South African economy, given that we do know that high levels of employment or the high employment multiplier effects are attributed to sectors such as manufacturing, such as construction, which have also been adversely affected during this fiscal year. But in the coming year, we do anticipate that economic regulations will be somewhat accommodative towards such sectors.
So the global unemployment crisis is the elephant in the room that no one is talking about. Massive levels of unemployment around the world due to the thousands of small and medium businesses being forced to close their doors, and larger businesses also cutting costs drastically is undoubtedly going to hamper this economic recovery. Wouldn't you agree?
It certainly would. It certainly would. And unfortunately, it becomes a significant adverse effect even when you look at it from a revenue collection perspective. The collector of revenues, being the South African Revenue Services, had recorded in the first 4 months of this year a decline in revenue by as much as 24%. And of course, given the continued response to the pandemic, it will continue to record that decline in revenue. We've also went further into downgrades with the ratings agencies such as Fitch and Moody's, and they've also given us a negative outlook as a consequence of this, which will continue to permeate if indeed we're unable to deal with the big elephant in the room from a public sector finance perspective, being the mouth of the hippo, which is really growing expenditure, which accompanied by a decline in revenue, which then raises a number of questions as to how then do we then allocate resources in the funding of responses to COVID-19, in responding to issues related to education, healthcare, infrastructure that is quite critically needed as part of the response to the economic recovery of the South African economy. I should say, however, Nhlanhla, that global forces continue to be accommodative to the rand, as we've seen rock bottom interest rates in the global financial markets, which continue to create an accommodative environment for emerging market economies such as South Africa. Hence, we've seen an improvement or an appreciation of the rand over the past couple of months due to rock bottom interest rates in the global marketplace.
I'm sure you'd agree that South Africa was already facing economic difficulty before COVID-19. Mismanagement and corruption, along with Eskom's troubles, were serious sore points, and the pandemic has not helped matters. What's your assessment in this regard?
The pandemic has indeed not assisted the situation as relates to South African state-owned enterprises, and of course, the leaping of the South African economy prior to the COVID-19 pandemic. The hope for me was to really hope that the positive spin-offs of the pandemic would really to accelerate the implementation of the structural programs that the president and his team had promised to be able to implement going forward. And part of those structural programs have been to really put state-owned enterprises back into shape, because over 40% of South Africa's economic activity is driven by what state-owned enterprises do. So they're very important in that aspect. And also dealing with the issues of high unemployment levels, and how do we ensure that the sectors in our economy that have high employment and wage growth multipliers, such as manufacturing, construction, business finance, and the services sectors, contribute towards dealing with really ameliorating the unemployment levels in South Africa, would also accelerate in terms of programs in that respect. We've also had the 500 billion rand allocation towards response to COVID-19 responses, and that was delineated in a number of ways. 150 billion of rand was allocated towards a reprioritization towards responses to COVID-19, and also there was a monetary response from the South African Reserve Bank with over 300 basis point rate cut towards providing some kind of relief to both business people but also consumers as well. All of those was also in an attempt to ensure that on the business side, they're able to retain as many people as possible, but also to contain the inflation costs that are associated with production, but also in the households to ensure that they're also able to have as much disposable income as possible, given the reduction in earnings capacity as a result of the pandemic. So my hope would have been that going forward, the response would be accelerated due to the adverse effect of the pandemic and also the precarious situation that the South African economy had already found itself in prior to the pandemic.
So we can only hope that post-COVID-19, the population's energy will be pointed at repairing this crumbling economy. But South Africa's road to recovery is likely to be a long one.
It is indeed likely to be a long one, Nhlanhla. I think you may have heard some analysts referring to whether or not we would have a V-shaped, a U-shaped recovery. South Africa's recovery looks more like an L-shaped recovery due to the structural blockages that exist in terms of responding to the blockages that South Africa's economy has been facing. For instance, if we've seen in some other developed parts of the world where a V-shaped recovery or U-shaped recovery are anticipated, that is particularly because they don't have similar challenges such as the ones that we have. Some of the key challenges that we have, which are structural in nature in South Africa, are the education outcomes as it relates to the productive nature of those skills and the input that it has to output in the South African economy. For instance, when you're looking at over 1 million learners that have started grade 1 about 12 years ago, you have about 600,000 of those learners matriculating or 700,000 on a year-on-year basis. Now, that speaks to some of the structural challenges that we face from an education, skills, and training perspective in the South African economy, and how those people are able to contribute to the output levels of the South African economy. Now, once we're able to deal with such blockages in the long term, that's when we're able to say that South Africa would be resilient to absorbing shocks of this nature in the near term. Today, it is the COVID-19 pandemic. Tomorrow, it's Ebola in the DRC. These are some of the responses that we need to ensure that our economy is resilient to absorbing going forward.
So as we wrap up, for those trading in commodities in 2021, how are things looking there?
So the Brent crude price is one of the pleasant surprises for the South African economy, which we've seen there was a significant tank as a consequence of the pandemic to levels around $20 a barrel. We anticipate that going forward, the average of the Brent crude price would still be below $50 a barrel. On the gold price, which was quite a favorite over this year as a consequence of the risk that was associated with markets this year, we do anticipate that it would slightly subside as there would be a risk on sentiment that would be taken up and which emerging economies such as South Africa would benefit quite significantly as global market forces would favor towards that kind of sentiment. The South African rand, we do anticipate enjoying further appreciation as a consequence of indeed the global monetary policy response and also the low interest rate environment globally as well.